Google reported just a couple of weeks ago that the search question, when is the housing market going to crash, spiked almost 2,500% in the last month. That's what we're going to cover in this monthly market report. This is for you if you're a real estate agent or financial advisor interested in market data to help advise a client, or perhaps you are that potential buyer or seller looking for some direction. I'm Paulo Rodriguez. I've been a mortgage professional since 2005, and here is the market data you need to make an informed buying or selling decision, or help your client do the same. Last month, I pointed out that fewer new homes were built in the last decade than in the 70s or 80s, and that this was a contributor to the lack of inventory we are seeing today. Take a look at this graph from the US Census showing single-family housing units completed by decade, and you can see the deficit over the last decade, where just 6.5 million homes were completed in this country, whereas in the prior 4 decades, only one was just under 10 million homes. Simply right now, the amount of housing in this country is not keeping up with population growth. A lot of this is because of the hangover from the housing crash back in 2008 and builders being hit hard. And today, that is contributing to the inventory problem. Google reported just a couple of weeks ago that the search question, when is the housing market going to crash, spiked almost 2,500% in the last month. So a lot of people talking about that, a lot of people wondering, is this like the last time? I'm not going to go deep into that today because I went there in last month's report as well as previous months, where I gave you all the information to be able to talk about that with clients raising that concern. If you missed that, or if you want to go back and re-listen to that, you can see all the ways that this market is different and how experts don't expect there to be a crash in US real estate, because this time we're not dealing with an issue in the health of the housing market, we're dealing with an issue pertaining to the lack of supply. What normally is happening during this time of year with inventory is we're starting to gradually see an increase. If you look at 2020 in the green as compared to 2021 in the orange, you can see that for the 4-month period analyzed there was growth of about 100,000 listings 12 months ago. And what happened this year? Well, just look at the orange. We stayed relatively flat. Just 20,000 listings added over those months as we've gone into the new year and started to go into the spring market. So typically we see more people putting their house on the market for spring, but that hasn't happened this year. The National Association of Realtors just came out with this. Demand remains strong as home buyers are snatching listings quickly off their MLS, and it takes approximately 18 days for a home to go from listing to contract in the current housing market. A year ago, it took 29 days. Look, 29 days is a short amount of time and 18 days is ridiculous. The question now becomes, when will we start to see listings come back into the market? Well, we're getting a look at that from Pulseonomics, and they said this. 43% of the economists they surveyed said the US housing market will grow in the second half of the year when folks feel more confident about going out and maybe having people in their homes. And what we want to start talking about right now as we look to the second half of the year is, why would people want to sell right now? The National Association of Realtors came out with a study and did a little bit of a deeper look at just that. Here are the top 5 reasons why homeowners plan to sell this year. 1, the home no longer meets their needs. 2, they can make a profit in the current market. 3, they want a smaller house, which means less work. 4, they want to live closer to friends and family. And 5, they want different features and amenities. The other thing that's very apparent right now is that the attitude towards owning a home has started to shift in this country. And this is an important trend that we want to take a look at. This is from the National Association of Home Builders. 16% of American adults are considering the purchase of a home in the next 12 months, whereas in the first quarter of 2020, only 10% of American adults were planning on buying a home. That's a 60% jump in the space of just 12 months. The attitude towards owning a home and buying a home has shifted during the pandemic. So now let's do a quick forbearance update. The number of active mortgages in forbearance continues to drop. This chart shows the numbers going back to May of last year, and if we zoom in over the last 2 months, 400,000 people have left forbearance. There hasn't been a whole lot of talk about that, but they're coming off of forbearance, and you can expect more and more people to continue to roll off of forbearance. Now, there's a lot of talk about what the Consumer Finance Protection Bureau will do to help those that are still struggling, which would in theory push foreclosures out into the future, but that is all pending legislation, and until we get something definitive, there's no point in talking about it. But upon exit of a forbearance plan, let's revisit the pie chart we've used in the past to see what is happening to people coming out of forbearance. 47.3% paid in full, 36.5% have worked out some kind of a payment plan, and 16.2% still in trouble. The executive vice president of RealtyTrack said this: "I think the math speaks for itself how well the forbearance program has worked, and it's one of the few times in my career I've seen a government-initiated program adopted as well and executed as well by the industry as this one." One last thing I'll say about the overall economy improving was that the Wall Street Journal recently reported consumers were more upbeat about their income prospects last month, and many appear eager to spend. The survey found that 8.9% of Americans plan to buy a home in the next 6 months, the biggest share of records going back to 1978. So that's a little bit different from what the National Association of Home Builders study that we saw earlier said, but still a lot of people saying we want to go out and buy a home. A lot of people optimistic about spending and the economy improving. Expect to see more and more of that as we go through the next few months. In the downturn after the housing crash, it took about 9 years for the economy to return to prior unemployment levels, and this time we're looking at just over a year, returning back to a very, very robust economy. As far as mortgage rates are concerned, here's the chart going back to the beginning of 2020 showing what rates have done. As you can see, since January of this year, there has been a significant rise. So, where to from here? I'm not here to make a projection as to exactly where they're going to be and when, but I think it's safe to say it's just a matter of when they're going to go up and by how much. As we look at the projections on this chart from Fannie, Freddie, the Mortgage Bankers Association, and the National Association of Realtors, the take-home message is that we're going to be anywhere from the lower threes to the upper threes for the next 12-month period. And here it is in a line chart from Freddie Mac. And despite the projected rise, we are still in a very, very good spot for those looking to take out a mortgage. So that's a wrap for the May monthly market report. I appreciate you listening in. Forward, subscribe, share. I'll be back next month. But before you go, if you're looking to purchase or refinance or know someone that is and would like a no-cost consultation with me personally, feel free to reach out and I'll be happy to analyze if your debt is structured in the most optimal way or if there's room for improvement. Thanks again for watching. Bye for now.